Hi, it's Wednesday, March 30th, 2016. I'll be talking today about the Bank of Frankenstein, and you might wonder, what's he talking about? Well, actually, it's the Bank of England. And the reason I call it Frankenstein, and I assume most of you know the story of Victor Frankenstein, uh, written by Mary Shelley. Um, he was the guy who played God and created a creature through alchemy and whatever science, and he created a creature which is usually called Frankenstein, but actually it was Victor Frankenstein who created the monster or wretch, and he lost control of that monster, and it didn't end up well. That story, the story of Frankenstein or Victor Frankenstein and the monster, and the reason why I call the Bank of England the Bank of Frankenstein is that the Bank of England is playing God, in my opinion, with the functioning of the markets. Markets are not supposed to be controlled by any central authority. Markets are just interactions amongst or between thousands, millions of people. Complex interactions and also information being exchanged between actors. How much they will pay for an item or a service, and the market information usually takes care of supply and demand. But the Bank of England and a lot of other central banks, or all central banks, and the name central gives it away. They're central planners. Yesterday was an interesting article in the Daily Telegraph, telegraph.co.uk, and I'll put it below, the link below this video. And it says, house price crash could leave savers without cash to fund retirement. Bank official warns. And by bank, they mean the Bank of England. So the deputy governor of the Bank of England, a fellow named Andrew Bailey, he's warning lenders to try to tighten credit to people or investors who are buying real estate properties in order to rent them. And today as well, I was listening to LBC, which is a talk radio here in the UK, and one of the topics was, are buy-to-let landlords, are they the new bankers? Are they greedy? And completely wrong question to ask. If it wasn't for the Bank of England's policy of manipulating interest rates down to zero, Bank of England rates are at 0.5. They've been at that level for 7 years or so. And if you put money in a bank in the UK, you get 0 or 0.1 or 0.2% a year. Annuity rates have, collapsed. Government, bonds or gilt yields have dropped, to like below 2%. So if someone's worked all his life and has got a good chunk of capital saved, let's say £500,000, prior to this, insane policy of zero interest rates in QE, they could get, let's say, 5-6% a year from a government bond, which would mean £25,000 to £30,000 a year, which is fairly good income. But now since the Bank of England started its QE policy, and they started it in 2009, and they started out, according to Wikipedia. I did look in the Bank of England website, but it's not very clear at all. Wikipedia is a lot better. They started out by buying 165 billion between March 09, September 09, 165. And then they've just crept up, and by the end of the QE program in the UK, which began in July of 2012, the amount of QE was up to 375 billion, which is not as much as the US. It's about 600, let's say, $billion. But, you know, consider that the UK economy is a lot smaller than the US economy. So it's still a huge amount. And that's kept, you know, that's completely kept rates low. They've been able to manipulate it lower. You know, you get no return in the bank. And if you buy a 10-year gilt, for example, let's say you get 2%, but then they tax you on the interest. So, you know, and the other thing as well, if you leave, you know, £500,000 in the bank, only 80,000 of it will be protected by insurance. So, you know, people are scared of leaving all that, you know, a lot of money in the bank. So what they've turned to is buying property, because property prices have also gone up because of the Bank of England policy of saving, you know, the banks and, you know, buying corporate bonds, you know, gilts, and keeping interest rates low. They've revived the housing market. So a lot of people haven't been able to buy the property, younger people, you know, young families. So they've had to rent, because the Bank of England has disrupted the market. They think that they know better than the market. They're playing God. They're Frankenstein. So now, you know, the buy-to-let, you know, market has become a bit of a bubble. You know, even the Chancellor, who's the Minister of Finance in the UK, he's had to bring in new acts, or not laws really, because laws are not really, you know, acts of Parliament. He's had to bring them in to rein in the buy-to-let that they created themselves. So it's just kind of amazing that this guy can come out, you know, this Andrew Bailey, Deputy Governor of the Bank of England, come out and warn about a house price crash, and that the buy-to-let market has to be reined in, when it was them who, when it's them who've created this problem. They've created the monster, and now, you know, they're trying to rein it in. And in my opinion, it's going to end badly, just like it did with Victor Frankenstein and his monster. So, yeah, the Bank of Frankenstein, the Bank of England, playing God, you know, alchemy, you know, even Mervyn King, who was the previous governor prior to Mark Carney, he's written a book about the end of alchemy. You know, he's admitting that, you know, things are not right in the system. I haven't read the book yet, but I've got loads of books that I'm reading, so I want to finish them first, and then, you know, get that one and read it. And the other point I like to touch upon that I heard on LBC today very quickly is Tata Steel. It's an Indian company who bought British Steel a few years ago, and now the British arm of Tata Steel is basically, you know, gone belly up, and you know, they can't rescue it. It's losing £400 million a year. It employs about 30,000 people in the UK, and the big discussion now, it was also on LBC, is whether the government should, you know, nationalize it or bail it out like it did with the banks. You know, just like the Bank of England, government shouldn't play God and think that they can do better than, you know, the market. And this is not about capitalism. It's about markets, you know, free markets. You know, governments bailing companies out or industries have never worked out. You know, why should the taxpayer finance a £400 million a year hole, you know, to save 30,000 jobs? It's just immoral, in my opinion. And it was a bit discouraging listening to the callers on LBC, most of them, thought, oh yeah, I don't mind saving British steel. It's very important. So people don't learn, do they? And our government itself is bankrupt, and if they nationalize uh, the British arm of Tata Steel, you know, it's like the blind leading the blind. So interesting topics here in the UK. Um, and good luck to the Bank of Frankenstein handling, the buy-to-let monster that it's unleashed on the UK economy. Take care, and I'll talk to you later. Bye.